You know, one of my favorite movies of all time is The Godfather. And there's this great scene in there where Al Pacino is leaning back in his chair and he says, "Just when I think I'm out, they pull me back in." It's kind of what the market's done lately. In case you forgot, the market can go down. Yogi Berra once said, "I'm starting to feel like it's deja vu all over again." Thursday saw a drop in the market in the Dow of over 1,800 points, which is something that was a daily occurrence just a few months ago. So we've kind of been in a little bit of a bliss with the market kind of coming up, and nobody knows why. We're on the precipice right now of probably the number one most expected pullback ever in history. It's been amazing to see over the last few weeks a market unlike anything I've ever seen before. Record unemployment numbers were coming out 5 times what the maximum unemployment was before, and then the market would shoot up. So the fundamentals seem to mean nothing when it comes to pricing in the market. If anything, I've seen how technicals and technical investing, computer investing, has taken over. Somebody recently once said, there's basically two worlds that we've lived in: the world before 2020 and the world once 2020 got started. Things have happened this year that have never happened before. A worldwide epidemic, a lockdown that we've never seen before. Oil was selling under zero, which is amazing. Prince Harry left the royal family. Like, what are you thinking about that? And so many other things that have been going on. Hertz recently just declared bankruptcy. And when they're bankrupt, they're really not going to have good financials. The stock went down to a low of 56 cents and then proceeded to bounce 400% up. An article I read recently attributed to all these new young investors who are going through this app called Robinhood, and they all looked at Hertz and said, "Oh, well, it's going down. It must be time to buy." So while professional investors like Carl Icahn were dumping billions and billions of dollars of this Hertz stock, young investors were going into it because they thought it was a thing to do, and it actually became kind of a pump and dump. They put money in, and the market or the stock went up. So I heard a term recently. This has become the market of the professional investors versus the pajama investors. It's been crazy. But I wanted to look at the market just for a second to kind of help maybe shed some light, at least from a technical aspect. I have some people ask some questions sometimes, so I think it's kind of good to take a look at what potentially might be going on. So what you see here right here is a daily chart of the S&P 500. Every little mark that you see here is 1 day. So if you see a green, it went up for that day. If you see a red, it went down for that day. If you look back here in the very beginning, this was back in the end of February, right before we had the downfall, then we hit the low, and then it started to come back up. It's up about 80% from where the original high point was. Along the way, many people have just been conservative, thinking it's just temporary, myself included. We did good during the downfall with our models, and then when the time came to turn around, we were overly cautious. We were more worried about the downside. So what we saw here recently on Thursday was this big red bar that you see over here. And that was a huge selling that went down, not only from a price standpoint, but if you see this little red bar down here, this is volume. And what you see is it's peaking up higher than it's peaked up in a long, long time. So that tells us a few things. Number one, not only was there a big swing to the downside, but it did so on a really high amount of volume. That means there's a lot of sellers out there. The following day, it looks like it didn't do much damage, but the problem is it didn't even come up near the high of where the day before was, and it closed down as well. So you see a lot of these little squiggly lines around here. So this one here is what's called a moving average, and everybody's always trying to find out where is price compared to where the average is. So if you remember back in grade school, they always talked about the mean and the mode and the average and that type of thing. So if price is above the average, it eventually falls back down to it. If it goes below the average, it eventually comes back up. So people are always trying to determine where is price compared to where it should be. When is it overextended? We always hear buy low and sell high, but when's it low and when is it high? One of the things that we use is this gray, these outer bands that we see here. These are called guardrails. And what I found is over time, price usually never goes too far beyond these guardrails. In fact, I'm going to slide it back here. So this shows over all the way back into 2016. And if you can see that, every time price starts to hit this gray area, it begins to reverse time and time and time again. You see it here, here, whoops, over here, and it bounces, and then it continues to move on. Then we had the huge drop. It dropped outside of that gray area, came back in, and then just recently what you see here is that it hit that gray area on the upside once again. I was talking to a client recently, right when it was starting to hit here, and I said the probabilities say that we might be looking for a pullback. In fact, this is the system that I built where we coded in our signals of high probability areas that show where is the high probability for price to go up and for price to go down. So the up arrows that you see here show that there's a potential for it to go up, potential for it to go down, so on and so forth. Doesn't always mean that it will, but these are just high probability areas based on chart patterns in the past. So we actually got a signal that said that there should be some selling coming up a few days ago, and then we look for what's called confirmation. Well, confirmation came quick, almost too quick. We readjusted, and we are actually now poised to the downside or protecting to see where price goes. So the probability is that we could be due for a fallback, but that doesn't mean that we will. There's a lot of barriers that we have to look at. Number one is this trend line. So what you see is people will draw these little lines and they'll wait for price to break below this area. That little gray dotted line that you see here, that's the 200-day moving average. So that is what's known as a support, and you'll see the price came right down to it and is bouncing back up. This that you see here is also a trend line. So what everybody is looking for, you have a lot of people who are looking at the same lines, expecting it to do the same thing, and then it kind of becomes a self-fulfilling prophecy. You have a lot of people right now that are looking for price to go below these dotted lines to close, and then that is an indication that there could be more selling to come. This line that you see down here is called the 50-day moving average. So what usually will happen is that price will then go down to the 50-day moving average. It might bump up a little bit, then they'll be looking for a close under the 50, and on and on and on it goes. So not only are we looking for what direction, but how far could that potential direction be as well? Is it going to go down to the previous low, which I would be very surprised, or is it going to go down about halfway and then bounce back up? Either way, the probabilities right now and the conditions of the market are definitely more in favor of selling. Doesn't mean it's going to happen, and I could be completely wrong. Somebody said, I think it was John Keynes once said, the market can stay irrational a whole lot longer than you can stay solvent. And that's true. As soon as you got it all figured out about where the market might go, the market will show you that it's going to do something else. So you'll see that we had some sell signals along the way here. It said, okay, we're getting ready to go to the downside, but then eventually, or excuse me, just a few days later, it gave us a long signal or said, okay, we need to buy back in. So signals can change very, very quickly, and you have to be ready to adapt to that like we do with our models along the way. So that's a daily view. Now let's look at what people call a weekly view. So this says what has happened each and every week. So before each of these bars that we were looking at, these were a daily activity. Now each of these bars are what happened for the week. So you see that green bar went up for that week, that week, that week. Then this was right when the fall started to happen. We hit down again. It got right inside that guardrail, that gray area that we see there, and then we started to bounce back up. Then what we see here, get rid of that little trend line I drew on here. We see that price for this past week sold down. It went to this little squiggly line, which is called the 10 moving average, and it's bounced back up. Right now, what we see is this is actually a bearish sign. So we have where last week the high was above the week before, and the low was below the week before. This is called an engulfing candle. These are all called candlesticks. Back in the day, the Japanese rice traders came up with these things called candlesticks. And all they are certain price patterns. And if you look based on history, what is the probability based on price action of what could happen next? So for instance, if you look over here, we see that there was a green bar where the high was higher than the week before, and we see where the low was lower than the week before. That would be a bullish engulfing. We would say the potential could go to the upside. Now we're on the opposite end of the spectrum. Doesn't mean it will, but the probability is very high that we could see further selling. And so what people are going to be looking for is a break below this low right here on selling. And if it breaks below on any good volume, then chances are it could continue down in this other area. So we might be looking at about a 5% pullback or 10% pullback, or none at all. It could change at any moment. I could be 100% completely wrong. But one of the things that people are also looking at is the fact that the market keeps going up as earning reports are coming out showing that everything else is going down. So when you look at fundamentals, a lot of people will technically look at price of a stock or an index over earnings. Forgive my writing here. And the more price goes up and the more the earnings go down, that could affect whether a stock that you're looking at or an index is considered overinflated or underinflated. So for instance, going back to the average, if we look at an average price and we think that price is up here currently, we say it's overvalued, or if price is under here, then it's undervalued. Well, historically, the S&P 500 has what's called a PE ratio, price to earnings, of 15. Currently, it's trading over 21. So in that situation, a lot of people would say that the S&P is potentially overvalued. Now, that's just one metric. And what you'll find is people can come up with 100 different metrics and reasons of why price should go up or come down or go sideways. And you never really know. You just try to put all the probabilities in order, and then you take your best guess, and then you adapt accordingly. So right now, we do see that there is a potential for the downside, and we have managed the portfolios and models according to that. But if things change and if price comes back up and closes back above where it was, then all bets are off, and then we go back to the upside, and then we will continue to adapt from there. We hope that the world is not getting ready to do part 2. Somebody said recently we're looking for another shoe to drop. All of a sudden we see COVID numbers are popping back up. The Federal Reserve, Jerome Powell came out recently and he said that we unequivocally cannot withstand another national economic lockdown. There's no way. And so that is a very concerning thing. If the COVID numbers continue to move up, and then we're back in the same situation and interest rates are at all-time lows, at zeros, we can't lower interest rates anymore. So make sure you go out and refinance that house mortgage while you have time. But we can't be in a situation where we go back through what we just went through again. We can't continue a lockdown and have billion-dollar companies go bankrupt and for earnings to continue to drop and people to be out of work. So let's hope it doesn't go that way. But the rest of 2020 is going to be very interesting to say the least. And we will continue to keep you updated. Appreciate your trust in us managing your money. We're looking to always protect and grow. And again, if you have any questions, let us know. Stay safe.